And a thriving securities exchange is a clear mirror of an economy's well-being. The Kenyan Exchange has been home to many firsts, including a self-listing. Jeffrey Odundo is a Chief Executive Officer at the NSE, and he's here with me to look at how entrepreneurs can leverage from this particular exchange as well as the performance so far. Good afternoon, sir.
Good afternoon.
Thank you for braving the sudden storm in Nairobi.
Thank you.
Let's talk about, obviously the GES came with a lot of excitement and anticipation, and everyone is looking at how they benefited. But let's start from the performance of the Securities Exchange. We saw some bit of a I don't know if I should call it a slowdown. We went back to the 4700s in terms of the NSE 20. How did you get there?
Well, I think what's happening in our market is a factor of many things. The first thing that we have to be cognizant for is that a market is now international. We have roughly over 55% foreign participation. Right. Now, with the global issues, the quantitative easing in the United States, the Greece crisis, the recent Chinese almost near market crash, right. All these tend to make the investors relook at their global strategies, right. And especially the frontier and emerging markets do take a hit out of this. Right. So we've seen sort of a holdback from some of the investors who would be very active. So that's been one of the key reasons in my view. Right. The second reason is our shilling. Yes. Shilling losing ground, much as it presents the investors the opportunity to buy our stocks cheaply. Right. When it continues the devaluing or declining in value, it does give them a bit of apprehension, and hence this again they hold back. So we are likely to see this pressure as the shilling fluctuation continues. Yes, that's going to be a definite impact. Right. The third thing is our domestic investors also. As the shilling is easing, as the shilling is weakening, you'll find that interest rates tend to go up in the money markets, and hence they shift their attention or they shift their portfolios towards the money markets, and hence leaving the equity markets a bit exposed, so to speak. So all those three factors interplay together, and that's really the reason we anticipate is causing all this.
There has been a peculiar performance of the foreign investor, which obviously whose participation now is above the 50% mark. Correct. In the Kenyan market. There are times that we saw a very tough situation for the markets. Tourism wasn't doing too well, and we thought that was the time for them to keep off. Yeah. But it was the opposite. Help us understand the character of this foreign investor in Kenya, because there are times where we expect them to reduce exposure and they increase it.
Thanks for that question. Now, the foreign investor, we have expanded what I'd call the pool. Predominantly, our market was interested mainly for investors in Europe and the UK. Right. Now we have a more diverse pool. We have people coming from America, the United States. We have people coming from the East. So the pool has expanded. We have a number of new funds being created globally, global funds, who are looking to tap into emerging markets. For a long time, emerging markets have been offering a very, very decent return. Right. So what is happening, despite the fact that the sectors are misperforming, it does create opportunity for new funds to tap into our markets. I mean, the valuations in some sectors are really attractive. For instance, tourism. The valuations are very attractive, and hence these are great opportunities for them to come. So it's the entry of new funds which are being created, family houses and all that, looking for avenue to come to market. Yeah.
Talking of new entries and deepening of this markets, you recently introduced a new segment that was really for the big-moneyed people, not myself. But help us understand the significance of this new segment that deals, obviously, with the fixed incomes.
Yes, we recently introduced what you call a restricted board that allows sophisticated investors to participate. It has high thresholds. Because what we realized over a long time, it's very difficult for investors to participate in some products because they think the quantum of what they're going to get is not good enough. Let me give an example. One of the companies recently introduced what you call an equity-linked note. Right. Now, it's a very difficult, I mean, it's not a very easy instrument for a normal retail investor to understand. And hence, somebody taking participation there would probably distort values. But somebody who knows what an equity-linked note, how it's computed based on net asset values of the company as it appreciates, will probably understand and give us and participate with the correct valuation. So it was demand-driven. We have sophisticated investors who have desired to have a unique board for themselves so that they can participate and really attract even other companies to list this sort of sophisticated products. So that's the reason we introduced it.
All right. Finally, you are among the few exchanges in the African continent that are self-listed. How's the performance of the NSE so far, and what can we look out for?
Well, year to date, historically we've done very well. Last year our exchange closed at 5,000, slightly above 5,000 points. As a company, we did extremely well with a growth of about 16% in profitability. This year, year to date, we've seen the valuation of the market come down to 4,500 in terms of the 20-share index. That notwithstanding, our average turnovers have been in the region of 700 million. And that's what I'm telling you, in spite of the fact that the valuations have come down, there is still a lot of interest in our market. The average turnovers, as I said, is about 700 million, which just shows that we are still looking at a positive year for the company, for the company. And for the market, we believe that with the new products that we're bringing on board very soon, the derivatives, the ETFs, rates, of which some of the incentives given by the minister in the last budget is going to help speeden up their entry into our market. So we're looking at a very positive year.
And obviously we hope for an improvement of the GEM segment.
Absolutely. Now with the GES done, I'm encouraging all investors to come into market.
Money there.
Yeah, there's a lot of money available in our GEM segment.
We'll leave it there. Many thanks. Jeffrey Odundo is the Chief Executive Officer at the NSE.